make sure that you are including draft financial statements in all your CaseWare files, okay? So the two documents I'm going to be showing you is a draft balance sheet based on map number, document 1.2, and a draft income statement based on map number, document 1.3. Both of these documents are on your document manager inside of your master file. So Full Mast has it. So you can either just copy and paste those in, or you can use copy components to bring them in. But the nice thing about these two documents are they are automatically ready to go when you copy your map structure into your client file, which every one of your engagements has Jazzit mapping in there. If we go under engagement and take a look at mapping for a second, you'll see there's a report tab there. This is how we created these draft financial statements. So we add things together, and if we don't care what the client's account numbers are, we don't have to mess around with control accounts or any of that stuff. So it just comes in as part of your mapping. Now, I'm going to load the balance sheet. Okay, so here's my draft balance sheet based on mapping. And what I want you to see is, first of all, that the assets equal the liabilities and equity. That's a good thing. It's balanced, okay? So why would it not? Perhaps if we didn't include a map number on a balance sheet account in the trial balance, that would throw it out, okay? The other thing that we're looking at, and this is probably even more critical, is that the ending retained earnings from the prior year agrees to the opening retained earnings of the current year, okay? So unless we're doing a prior period adjustment, those two should be the same. And Lori, why would they not be the same? I'm gonna make her turn the mic.
Why would they? Sorry, I was answering a question here. Could you repeat that again?
Why would the ending retained earnings of the prior year not be the same as the opening of the current year?
Well, it could be that the journal entries were posted to the wrong year, perhaps.
Yeah, for sure. I mean, we can imagine all kinds of scenarios here. If when you import your trial balance and that number is not correct in your opening balances, get it so that it is. Because if these two numbers do not agree, when you go to turn your rounding on in your financial statements, you're going to go from disabled to recalculate, okay? So you want these two numbers to be the same, and they should be the same, okay? This is just doing the basics here. Now, the other document that we want to look at is 1.3, and this is our draft income statement based on mapping. And here's what I'm looking at. Down at the very bottom, this net income or loss, this 991,620, that is based on mapping, okay? So when you've done all your mapping, that's what it thinks income is or loss. Now, down in the very bottom, in the status window, there's another number down there, and this is the net inc number. So this is CaseWare's adding up all the I-type accounts. These two numbers should be the same, okay? That's a crucial check. Now, if you're using consolidation and you have entities, then you could use your context window and just make sure that the entity is set, for example, to parent, and I'm looking at the parent draft income statement, okay?
Hey, Mike.
Yeah.
Can I just ask a quick question?
Sure.
When you say all of the accounts with the type I, you're talking about that column on the working trial balance there, where it's either a B for balance sheet or I for income statement, right?
Exactly right. And those properties would go on there as soon as you attach your map number, because that's, you know, part of the properties of mapping. So yeah. So once we get that, and I'm going to just jump back here. So once we know that our retained earnings is tying in properly and our net income is tying in properly, we get a warm and fuzzy feeling thinking, hey, our mapping must be right. And then we're ready to go into the statements. If you skip this step, you may have some fun, especially with huge trial balances. You know, you're not sure if it's something you did in your statements or if it's something you did in your mapping, and this really helps get things organized. I mean, I can print these off. I can print them off, have a hard copy, be looking at my statement on the screen, the Jazzit financials, and I get an idea. You know, it's great for seeing where should the numbers be, okay?
This also applies to when you're working in a consolidation file as well, right? Like if you have separate income statements selected for each or created for each entity, then the net inc that'll show on the bottom right will also reflect that, right? And
yeah, absolutely.
I don't know if you want to really open up a file or not, but this is very helpful.
I'll show it really quickly because it is really good. So when I go into here, this is a division example file. I have a north side, south side admin. I have different entities defined in here. And I could go in on another Java. We could talk about consolidations. It's a whole topic. But here, the context, when it's set on default, that just means that whenever I change it up here, it would just be the same. So if I set it to division 10, this would be, or fund, could be a fund, but once I set it to division 10, if I open this up, at the very bottom, there's the income or loss for that division. You notice it doesn't tie into this number at the bottom. That's only because the context is set right now to parent. So if I set that to division 10, then you'll see it's very small. Just trust me, 1.467 million agrees to this. So we could create draft income statements for each of the entities or funds or divisions. And again, that's a great check because we can print that off, do a schedule, inside our financial statement, and we want to make sure that agrees to what this draft is showing us. Okay. And it's free. Once you copy in your mapping, you have these draft statements automatically, so you might as well take advantage of it. Okay,